But
Sure.
what's we're seeing lately is great. Is looking at like the bank indices breaking down and Bitcoin breaking back up. That's a cool indication of where I think we're going. People are realizing that this digital asset that when I first heard about it, I thought it was silly internet money is becoming global collateral.
Hey guys, welcome back to Library of Wealth. In today's video, we have senior macro strategist Mike McGlone sharing his insights on the current state of Bitcoin, cryptocurrency, and how the Federal Reserve's latest move will affect the market. McGlone predicts a bottom for Bitcoin, but acknowledges that past bottom prices have been painful and have taken several years to recover. He sees the current situation with Bitcoin challenging, but believes that buy and hold strategies will be okay in the long run as regulation will positively impact the prospects of the cryptocurrency market. McGlone views regulation as necessary to attract investors to the market and ensure long-term stability. McGlone predicts that America will follow a path similar to Switzerland and Canada and believes the U.S. economy is in need of a major correction. Let's get right into the latest interview with Mike McGlone as he talks about his prediction for the price of Bitcoin and what we can expect next from the Fed. Don't forget to hit the like button and subscribe if you enjoy the content we do here on this channel.
I think we're heading towards one of the biggest resets of our lifetimes in terms of markets, and that's just studying pumps and dumps liquidity. Gold's in the center, and the key thing I ask myself every day, Matt, is I started saying this a year ago, is what stops this? And every day that goes by with this, we're seeing in the bank crisis, are just those kind of things. They're trees in the forest, and the forest is we are just on the back end now of the most aggressive Fed tightening ever, if you do it on a log normal basis from zero, and the most aggressive global central bank tightening ever. The long and variable lags have barely started. So to me, for the stock market to come out of this, at some point we have to have a long and variable lag from a period of easing. And the key difference from the past, when people say, "Oh, when they stop hiking, we'll do better." Remember, I was trading treasuries in '94 during that huge hike cycle, and that worked very well. Once we were done, the market did well. The big difference is the plateau we're coming from, which is what I had to start out with. Is we're coming from the most expensive stock market ever, relative to the rest of the world, relative to housing, and relative to GDP. Less so the dollar. I think the dollar is due for a pullback. The key thing to remember about the dollar, when you measure the dollar versus a basket of fiat currencies using the Federal Reserve's trade weight rated dollar index, it goes up over time. The only time it goes down is after it goes up a lot. Well, last year it went up a lot. So it's in a pullback mode. Fed pivot might be bad for the dollar. But the fact that gold made new highs in terms of the euro and made new highs in terms of the yen last year was because of dollar strength. But to me, it's more just an outright gold thing. But I think, yeah, you have to look at it as a bit of a reciprocal to the dollar. But I'm not so bearish in the dollar overall. It's just this asset, gold, I see as it's just a bull market waiting for a catalyst. It's getting it. It's that 2,000 level is just hurting people. I think what it's waiting on is that Fed pivot. And the key thing I think that's really going to kick in for gold to be an enduring bull market, just pop up to the next key resistance, round number resistance around $3,000, will be when people start realizing that we are in a elongated bear market than U.S. stock market. So,
What is your view on digital assets, aka Bitcoin?
Bitcoin, Ethereum, and Bloomberg Galaxy Crypto Index, I'm fully very bullish in the big picture, but very concerned about the macro ebbing tide of what I see potentially a bear market in stocks. So I view Bitcoin as global digital collateral in the world going that way, and every single risk manager on the planet, every day that goes by, they all know I have to have a piece of this. And I think what's happening lately with Bitcoin running up around almost back up to now 30,000 with the stock market breaking down, it's hitting to that inflection point that I've been waiting for a while, and I'm quite impressed that Bitcoin is going to be starting to trade more like a risk-off assets. But cryptos are still the riskiest asset on the planet, fastest horse in the race, and Bitcoin's just the least risky. So I'm a bit stuck in the middle on Bitcoin. On the big picture, I don't see, anybody who's allocating to anything about gold anymore has to have some Bitcoin in that space. I fully believe what Saifedean Ahmed said in his book, The Bitcoin Standard, that central banks will eventually hold Bitcoin. But it's that near-term issue I'm worried about. If I'm right that stock market breaks down for a normal recession, it's going to pull down all risk assets. But
Sure.
what we're seeing lately is great. Is looking at like the bank indices breaking down and Bitcoin breaking back up. That's a cool indication of where I think we're going. People are realizing that this digital asset that when I first heard about it, I thought it was silly internet money, is becoming global collateral. And I fully expect that to happen in the long term, but I'm still really worried about the ebbing tide. So I've got to lose my bearishness in the stock market and or see more what's happening where stocks break down and Bitcoin's inching higher. This divergent strength is just what I was expecting. It's just I'm still worried about a rug pull in the stock market. I mean, I fully expect a 20% drop in the S&P 500, and if I expect that, I expect crypto assets to suffer. So here's the key difference I like to point out. Bitcoin digital gold is going to do better. It should continue outperforming most. I mean, there's 23,000 cryptos, so there's way too much speculation in that space. Ethereum is making happen what I think I find institutions still don't understand it. Some of them get them, some don't. That the most widely traded cryptos are not Bitcoin and Ethereum. It's crypto dollars. Tether's one, and there's a dozen other ones made possible by Ethereum, makes possible NFTs, makes possible tokenization. So this technology is, to me, it's as revolutionary as futures were 50 years ago, as ETFs were 40 years ago, and it's just a matter of time. But like I said, they're so new, and you got to expect the volatility. But I'm afraid Bitcoin might have pressure below 20, around 20, and at some point it's going to get above 100. I just got to see how we get through this rug pull in the stock market.
A couple of years ago, or about a year and a half ago, you looked at the correlation between the NASDAQ and you looked at correlation Bitcoin. I mean, it was kind of moving hand in hand, and that's really kind of widened a bit. It's not as correlated this year alone.
Yeah, great. That's what's been happening lately. I mean, particularly when the bank index broke down hard. So I love overlaying that chart. If you go back to since 2019, KBW bank index is overlaid with Bitcoin. It's almost exactly the same. Banks break down, they're banking down harder. Bitcoin banking up. Bank crisis, might as well go to something that might be safer. I completely agree with that scenario. It's happening. It's happening in front of our eyes. So I guess I'm like, whoa, is this really starting to do it? But the way I look at it is there's so many good indications. Like you mentioned NASDAQ. I love looking at, if you overlay Bitcoin with any risk asset, even commodities, everything over the last 5-10 years, you get that standard outperformance, Bitcoin beating everything. But what's significant is the falling volatility. Bitcoin volatility versus the NASDAQ, you use like annualized just a few years ago, peaked around 10%. Now it's only like 2 to 3 times the NASDAQ. Bitcoin volatility is running around 60% annualized. That's about where, Amazon was much higher than that in 2000 when Lehman put out a bad report and Lehman ended up going under. It's not too much higher than where gold was in 1980, and it's clearly heading lower. So to me, it's that maturation. And one thing I think that's most significant I want to really end with is what it's been doing. So our regulators are pushing back in the short term, and they're understandable. I mean, what happened with FTX and Sam Bankman-Fried. But if you look at Bitcoin futures open interest. Now that's pure adult markets. It was on the few, and this is CME listed, it's a bull market, clearly a bull market. It's one of the few markets I pointed out last year. We're seeing more and more interest. It's squashing the cash and carry, squashing the volatility. The hedge funds are getting in there in a big way because there's money to make, and it's just making it much more of an adult asset.
McGlone cites technical indicators such as the amount of time Bitcoin has spent below its 200-week moving average as signs of market maturity. He predicts a mild recession with a typical earnings drop and sees Bitcoin performing well as a risk-off asset. A recent Bloomberg survey shows that 70% of investors believe the stock market has not yet hit its low, with 35% believing it won't reach its low until the end of the year. McGlone sees the recent shakeout in the crypto market as a cleansing for a longer-term run, unlike the stock market, which hasn't had an orderly correction since 1987. He also predicts a future cleansing of the stock market to get rid of bad actors, just like we've seen in 2022 with crypto. What do you think about Mike McGlone's price prediction for Bitcoin, and where do you see the crypto market at the end of Q1? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is the Library of Wealth. We'll see you in the next video.